Hey, good evening, everyone. Brian Hoops here with Midwest Market Solutions. This is our Market Solutions Hedge newsletter, and it's February the 20th, Wednesday night, and we've got a lot of things to look at, so let's get right into it. This is a chart of July soybeans. We noted the double bottom and how we had a rally going since September, October, November, December, January. We've not been able, we made sale back in here on this post-harvest rally, and we had a target a little bit higher. Since that time, we've not been able to get anywhere close to that, and we're starting to break the uptrend line. You can draw this trend line from back in September. And so we know fundamentally the market's way overvalued with 925, 935 million bushels of stocks on hand. No business being at the $9 mark. Historically, and this is the largest stocks in history, we could be much, much cheaper than where we're at right now. Technically, the trend has been higher, so that's kept some of the traders from wanting to sell this market, and that could change with the technical trend being lower, as well as getting closer to this March 1 deadline that the president has imposed as far as an agreement with China. Now, he's made hints that he may not enforce that deadline. He may pass it another 30 days. But no matter what happens, we get another 30 days, we're not going to reach an agreement with China. There's no reason for them to make an agreement. And even if we do, it's probably back-end loaded where they make purchases during our harvest time frame rather than in the upcoming months, as they'll have South American supplies to draw off of. So our target's been up in this area. We have puts that we bought in here. Those puts are profitable now with the market breaking down. Let's go ahead, exercise those puts or just sell them is what I mean. Either one, whatever you can do the best on. Work with your broker on doing that. Get out of these options. Go ahead and make the cash sale. So we're going to record. We'll use probably tomorrow morning as a time to do it, but we're going to record profit on the puts, liquidating those put options on the beans, and making cash sales on the rest of the beans. So we're going to record 100% sales on old crop, and we'll offset the hedge profits that we have against it. So we should come out pretty well, and we can always look to reown it. If we get back down to this double bottom and weather starts to change, we can reown it for the upside. As far as new crop soybeans, we're still holding the trend line. We have one sale on the books here, and we'll put another sale out at 990, a 5% sale, another 5% up around 1010 if we get some opportunities to do that. So we don't want to forget about new crop. We're going to do the same strategy for corn. You can see we've just gone nowhere except sideways, and now we're starting to break down a little bit. Similar to what we did here in November, we're starting to weaken from a technical standpoint. The trend is starting to turn lower. You can see kind of series of lower highs here. And looking into the future, unless we get some real weather problems in South America, Ukraine's going to have a big crop. Argentina's going to have a much, much bigger crop than they did last year. And our exports are going to slow even further. We need to be averaging about 45 million bushels each week to hit the USDA forecast. I don't think there's any chance that we'll do that. That means our ending stocks are going to increase by into the summer months. They're not burdensome now, but if they increase in the summer, it's not going to be very good for our price levels. I don't like this, this price, but it is what it is. We've got puts here that we're going to sell, and we're going to use that profits to offset these cash sales and bring our average up. So we're going to do that for the old crop, new crop, old crop corn and soybeans, and this old crop value will be shown as 100% cash sales. Now, as far as new crop, our sales target's up here around this 403 to 405 area. We're gonna put a 5% sale out there at this, and we're gonna make another one up into this 412 area if we get an opportunity. Now, let's look at the wheat. We're going to focus on the May contracts as March is going into deliveries in here. This market has really free fallen. And you look back at where we made sales earlier, back up in this, this range, they all look pretty good. But we still have quite a bit of crop left to sell in hard red winter wheat contracts. The spring wheat were much more favorable sold, but we do have some good hedge profits to add against our cash sales. Now, if we get a rally back here, that's a long way. That's almost a 40-cent rally back to this breakdown point. Make a cash sale. Another sales target will be up in this range. This might be all we're going to get. And as I said, we can add to some profits with our hedges on this old crop inventory. We got to get some sales on the books here and get some get rid of this inventory. We don't want to carry it any further than we have to going into the spring here. So definitely time to get rid of that. We've got to turn our attention to the new crop. And in this wheat, this was our previous sales that we had made way back in August. I didn't expect this market to really free fall down to 472, $1.50 from where we made our previous sales. They look really good right now. If we get a rally back up, even in this 534 range, there's probably going to be some selling. We're going to give it a little bit of more opportunity, some sales here if we can break dormancy. But we can look at this old crop wheat chart here, and you can see what could happen to a market, nearly a $2 drop from high to low when you don't have demand for your product. And I'm afraid that is what could happen with this soybeans and this corn. A lot of product being stored by the farmer, and we could see prices really start to free fall like they have here in the wheat contracts. Minneapolis, we're making contract lows, but maybe not as extended of a drop. We don't have as much to sell there, but we'll try and hit some targets here on the old crop stocks. If we get a rally, let's try and get out of our wheat. But corn and soybeans, we're going to wash our hands of inventory and use options as a way to manage our risk. We are running out of time on these old crop stock options. We can always look to buy July's and re-own the crop if we want to. All right. Hope this helps you out, and I'm sure you have some questions. If you do, please reach out to me. This has been Brian Hoops. Have a great night. Good luck. I'll be back next week with our next newsletter update. Until then, let myself, Merrill, know if you have any questions. We'll be glad to talk with you. Talk to you soon.